Most people believe investing is about intelligence. They think smarter people make more money. But the market doesn't reward intelligence, it rewards behavior. And this is the uncomfortable truth. This is why nearly 90% of investors lose money. Every year, millions of people enter the market with hope. They believe this is finally their way out. They watch videos, they read posts, they follow tips. At first, everything feels exciting. Green numbers, rising charts, easy profits. But what they don't realize is this: the market is not testing their knowledge, it is testing their emotions. When prices go up, something dangerous happens. Greed slowly takes control. People stop asking, "Is this a good investment?" and start asking, "How much more can I make?" They buy because everyone else is buying, not because it makes sense, but because they are afraid of missing out. This is not logic, this is psychology. The market moves in cycles: up, down, fear, greed. But human behavior never changes. People feel confident at the top and terrified at the bottom. Ironically, this is exactly the opposite of what works. When the market starts falling, fear arrives. People don't think long-term anymore. They only think about pain. They watch their profits disappear. They imagine losing everything. And then they do the worst possible thing. They sell at the bottom. Not because the investment is bad, but because fear is louder than logic. Multiple long-term studies show the same result. The average investor earns far less than the market itself, not because the market is unfair, but because emotions destroy returns. Fear and greed cost investors more money than any market crash ever did. Humans are social creatures. We follow the crowd. If everyone is buying, we feel safe buying. If everyone is selling, we panic and sell too. But the crowd is almost always late. By the time something feels safe, the opportunity is already gone. After a big loss, something strange happens. People don't talk about it. They don't post about it. They quietly leave the market and tell themselves investing doesn't work. But the truth is, investing works. Human psychology doesn't. Successful investing is not about prediction. It is about patience. It is about controlling emotions when everyone else is losing control. The market transfers money from the impatient to the patient. The biggest enemy of investors is not the market, it is fear, it is greed, it is human behavior. And until that changes, most investors will continue to lose.